Good afternoon, everyone. Welcome back to the channel. It's been a hot minute since I've made a video, but new year kind of thing. We're talking about consistency here. So we're just going to get back into it, dive into some charts here. I hope everyone had a good New Year's and a good Christmas. It's been a pretty interesting past few really weeks within the market. You can see that we made a high of about 609 on the SPY here on the daily chart, and we're going to take a look at the daily time frames in this video and kind of work our way down and maybe even look at a few setups that I am keeping an eye on. But we had a little bit of a patchy session going into Christmas. The S&Ps pretty much fell 4 days in a row last week, and we're kind of seeing a little bit of that continuation to the start of the new year. So looking here at the SPY chart, we can see on the top left corner here that we have a neutral score, and basically what that is showing us is it's a combination of aspects that I look at for my personal trading. We're looking here at structure, we're looking at the EMAs, the SMAs, we're looking at the MACD, we're looking at the oscillator, and trailing ATR and overall momentum on the overall chart. So looking at this in conjunction, we can see that it is giving us a neutral score. It's been neutral for the past probably 2 weeks, really. And we can see that just by confirming it here on the daily chart. Price is below the 21 EMA, is below the 50 SMA, which is this gold line here. And, if we dive in just a little bit further here on the 30-minute chart, you can start to see, even more weakness here, especially from the structural standpoint. You can see here that we have a max bear score, which is it's the max negative score that I can give the chart. Is a minus 50. The momentum's terrible. The structure is bad. So we can see that in the shorter time frame chart, bears are most definitely in control here within these smaller time frames. If I zoom in just a little bit to the latest price action, we can see that price really was kind of contained in this zone here that was established back on Monday, and we haven't really had any crazy fluctuations or range expansion. And up until really this afternoon around 12 o'clock, where price broke down below the low of the range that was established on Monday, and we can confirm that just by looking at the advanced decline issues from today. This is a 2-minute chart on the advanced decline issues. We see that we started out pretty strong right out the gate, positive 1800. Not much progress, just kind of sideways, and then all of a sudden we just kind of came on crashing through. And then again at around that 12 o'clock, we had that bigger slide to the downside, which is where we had that breakdown here on the 30-minute chart. As you can see, we broke below Tuesday and Monday's lows, and we hit this level here at about the 580.50 mark. And if we zoom out a little bit, we can see that that is pretty much where the next swing low resides. If we come back a little bit more onto this daily chart, we can see that there is a little bit of a gap to take care of down here at about the 577. Now, I did go ahead and take a little bit of a risky swing based upon this idea that we are going to come down and fill this gap. Now, in a little bit of pain right now, but that is actually a-okay, plan for these things. But based upon, the way the hourly is structured, we have a strong bear. We're in a low compression squeeze, and I'm looking for that low compression squeeze to fire in the direction of the trend, which right now on this hourly chart is definitely lower. We can see that we did, we're not in a squeeze prior. Now we are contracting once again, and with the bear structure, I'm looking for this to actually come further down. I'm actually okay if price wants to come back up to about 587. I got a little bit of time, not much, but a little bit. I got until Wednesday to make these things, to make this contract work. I may even get into a debit spread to maybe try to offset some, but nonetheless, I am looking for this breakdown below 580.50 to fill in that gap down to about 577, 576. So that is definitely something that I'm keeping an eye on, especially with these strong negative connotations in the smaller time frames and a neutral daily time frame. So 30-minute continues to be max bear. You can see that it is pretty gross out there in regards to structure and momentum. So they got a lot of work to do as far as the SPY. Moving on to the NASDAQ daily chart, pretty similar story here. Oops, there's my network in case you're wondering. Pretty similar story here. We got a neutral score here for the Qs, doing its best to hang on to the daily 50 for the time being. We are in a low compression squeeze, so we see that volatility expanded pretty much throughout the entire month of November and December. You had that big move to the upside, all about the semiconductors and big tech names. But now that tech has been kind of taking a little bit of a sidestep. Pretty much the entire market has been. We'll take a look at the other sectors here, but neutral spot here for the Qs, holding on to the daily 50. If we zoom into the hourly, we can still see that it gets a little bit worse, just like the SPY. You have a mid-bear score here. You're below most of the key moving averages. You're below the 50, the 21, the 200, etc. Just not a good picture here on the hourly. And then if we zoom even further into the 30-minute, yeah, you can see, we had that change of character and a little bit of a break of structure here. We got a strong bear. We're in a low compression squeeze. We're going to see if that goes into a mid compression or if we just come out of the low compression squeeze and have another volatility expansion going into tomorrow or even next week. So bear is still very much so in control of the shorter time frames. So definitely something to keep an eye on. We know that the small caps continue to be a little bit of a struggle. I'm actually keeping an eye on this. If this is a little bit of a bear flag, right above the daily 200 simple moving average, you can see the small caps are far worse. They had a very nasty reaction to the Powell press conference the prior week, where they said that the rate of rate cuts for next year or now this year are going to be very, very slim. So that's something that's going to affect small caps in general. So we have a mid-bear score there on the daily. The 1 hour, you have a strong bear with a mid-compression squeeze. This is just your regular squeeze where the Bollinger Bands are within the Keltner channels. So something to keep an eye on here for the small caps. If we go even further and look at the 30-minute chart, we are actually in a neutral spot. So that's actually kind of interesting. We could argue that this 30-minute chart might be a little bit better compared to the SPY and the QQQs, but still nasty regardless. So if there's anything that I'm going to be playing, it's going to be the SPY or the QQ. But moving on to the Dow. The Dow has also had its fair share of, a sell-off really since it hit a high of 451 back in the beginning of December. It just hasn't called its bearings. It broke the 21, it broke the 50. You had that bad reaction during the Powell press conference, and now it looks like we're setting things up to at least test the daily 200 here. I don't see why not at this point in time. There's not really much holding things together. Hourly, we can see if we zoom in, or excuse me, zoom out a little bit. I need to zoom out just a little bit more, maybe more than 30 days. We don't get support until we get to about this 416, 415 level. So that's kind of what I'm going to be looking for here on the Dow. Let's see. One of the major talking points, that I've seen is that this hourly gravestone doji potential here on the monthly Qs, and that's definitely something that I'm paying attention to as well. We've seen semiconductors get beat up, not really moving too much, just kind of taking its time, taking its breather here. You know, I'm still holding on to some TSM debit spreads that I'm looking to hopefully kick into gear relatively soon, because I got those expiring in January. I'm looking for a move still to that 212 mark here to take out the swing high. TSM is still looking pretty good. We got that daily squeeze overall. There's one chart that I am definitely keeping an eye on, and that is Roblox. Roblox has a max bull score. That is definitely something that I'm paying attention to. And we also have a fresh mid-compression daily squeeze. So this thing's looking up to gear up for another move to the upside. Hopefully to the upside. The one thing that's kind of containing a lot of these moves recently is the fact that the broader markets, especially with the SPY and the Qs, have been really sloppy. So that's really my only gripe right now, and that's what's making things a little bit hard as far as swings go, is the overall sloppiness of the main indices. But we can still get those outliers, and that's kind of what I'm looking for here with Roblox. We have a nice daily squeeze, max bull score. If I zoom into an hourly chart, we can see that it is in a neutral position, but it also has a mid compression squeeze. So if this hourly squeeze goes, yeah, we're in business here. That hourly squeeze can fire long, which can trigger the daily squeeze. If I zoom even further to a 30-minute squeeze, we can see that this 30-minute neutral, this 30-minute squeeze here is already trying to fire to the upside. We just have to break above this 59.30 mark up to about the 62. I would want to take care of 62. So that's definitely something that I'm paying attention to over the next few sessions to see if Roblox can get going. One more setup that I'm looking at is Net. Net has a strong bull score. It looks pretty good. We got a fresh daily squeeze. So just seeing if it can hold on to this daily 21 EMA. And if we can get a breakout above this 116, it had a little bit of a breakout the prior week, and then we had the Powell shenanigans that kind of brought it down to earth a little bit. Same with everything else, but it's holding steady. It's holding its own. So if the broader markets can really turn themselves around, then some of these stronger setups are definitely going to go. So that's one of the key things that I definitely want to pay attention to. You know, we've seen some of these bigger boys, starting to cool off. Apple not doing too much these past few days. Microsoft continues to be struggling, not really getting much traction. Google's still holding up, so that's definitely something to pay attention to. Of course, Amazon is still doing okay. Tesla, it's had this nice post-election rally, and it's kind of come down since then. So just something to pay attention to. Look for names that are starting to get some of these bids, and if the market wants to turn itself around, I'm looking for names like Roblox, Net, and maybe even Hood to continue to catch a bid and push into the highs. So that's kind of the main play that I'm playing at right now. But other than that, yeah, a little tricky situation out there with the overall indices. You got some broad weakness to start the year, and we'll see if it continues to push or if they're going to try to save things and move them back on out. All right, I think that's all I really wanted to cover there. So let me just make sure I didn't miss anything. Yeah, I think that's all I wanted to cover today. But all right, we'll see what they have in store for us. I wanted to check out the S&P futures. We have a strong bear on the 30-minute still on the ES. Needs to break 58.62 for more downside potential. And same thing with the NQ. Everything's just been kind of weak for the most part. So needs to break 21,000. I even saw that on the book map earlier today. 21,000 is a strong level for the bulls to hold. So is pretty much a bear's market to lose. Bears are in control until something changes, and for right now, they got a grip on the smaller time frames, and we'll see if Bulls want to try to turn things around. We'll see it on the 30-minute chart for sure. But all right, that's going to be it for me, guys. I will see you all in the trading room on tomorrow, and we'll finish the week strong. All right, guys, have a good one. Take care. Bye-bye.